You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Hey everybody, welcome to Quasar Markets Live. You have my friend Alan ELLMAN, Mr. Covered Calls himself. Listen, Alan, it is so happy to see you on the show, the blue collar investor himself. We've got a great show today because he's going to actually walk you through things that just you need to learn, because this is how the markets actually work. So welcome to the show, man. How are you?
Always good to be with you, Steve. Always.
I tell you, you are the master of the machine, the market itself, because I think a lot of people don't really understand. You're at all the events that money shows, and you are one of those guys who just gives of themselves over and over again, so that people do understand that the market is not about picking your cell phone up and buying and selling. It's not just about crazy options of zero DTEs, but how to make money in a way that maybe they didn't even quite think about. And I love this, so I'm very excited about it. So I'm going to really kind of turn it over to you. First of all, Alan, tell me a little bit about your company. And for those of you out there who don't know, I'm going to post it so you can see it. It's called the Blue Collar Investor. Tell me about your company and what you do.
Well, we're basically an educational and stock screening company. So we teach the main go-to strategies for us are covered call writing and selling cash secured puts. So we are on the sell side of options. The way I frame it in my seminars, we are the casino, not the person at the slot machine. When we make our trades, step one, we get paid, and we're lowering our cost basis. So we're putting ourselves in a position to beat the market on a consistent basis, something
Right.
I've been doing now for 30 years. So the education, and then we screen for stocks appropriate for selling options.
Yeah, and I think that a lot of people don't really realize it, that some of us in this world didn't really start out, and I did. I wanted to be a broker at a very young age, but you started out as something else, and I should call you Dr. ELLMAN. I apologize for that. Tell us how you got started into this whole world.
Yeah, I was my first career, I was a dentist. So I was doing root canals and crowns while you were doing all the financial stuff. But but I actually taught myself options back in the mid 1990s. And one thing led to another. I ended up writing a book that went to #1 on Amazon on options. And then after that, I started getting invited to speak all over the country. In 2011, I realized, you know what? I can't do both anymore. I had to make a career decision, and I decided to hang up my drill and follow the path that we are in right now. No regrets at all.
I appreciate it. And Alan, I have to ask you, a lot of people ask me all the time, Steve, even on yourself, what was the thing that said, okay, enough is enough? What was that tipping point for you that said, okay, put the drill down. Now I'm going to do this full time?
Well, I had two careers that I really loved. I mean, I love being a dentist. When you're a dentist, you meet families and have relationships with families on a generational basis. Parents, their kids' kids. And I had a staff that was with me for decades. And it was very hard to walk away. But I love doing this so much. And live audiences, speaking at live audience. And I mean, it was something I was doing for myself and my family. But it kind of came to the path where I had to make a choice because I just could not do both anymore. And I said, you know what? Let me do something that I haven't done on a full-time basis ever. And I went this way. And people always ask me, looking back, do you regret it? And not for a moment. I miss people, but I don't regret taking this path. I just love what I do every day, just like you do.
Yeah. All right. Enough about me and enough about drilling holes in people's mouths. Let's talk about what we came to talk about, and that's the covered calls. And you are the master of this. So you have brought us a whole thing today, and I can't wait to get to it. So let's get to it right now. Dr. ELLMAN, please, for the love of God, get us to the covered calls. How does this thing work?
Okay. You want to pull up the PowerPoint? Okay. Here we go.
Yep.
All right, so what we're going to be discussing briefly today, there's about 5 or 6 slides that I actually created this morning before the market opened. And I want to show you viewers how to use covered calls in both a traditional or aggressive way, and also in a defensive way, because some people might feel like these days with the market being uncertain, and also in bear markets, you may want to structure your trades differently than you do in normal to bull market environments. I'm going to show you both. And I'm going to use as an example IBIT, which is a Bitcoin exchange traded fund. I know Howard loves that. And I've been using it when I met Howard, and he told me that this is one of his favorite securities. I started trading options on IBIT about 5 or 6 months ago, very, very successfully. And I'll tell you why I love these Bitcoin securities as well. So that being said, an overview of what we'll talk about in the next 4 or 5 slides is about cryptocurrency, which the most well-known form, of course, is Bitcoin. And a lot of people ask me, hey, is there a way I can incorporate crypto into my covered call and cash secured put trades? And the answer, of course, is yes. And again, my favorite is IBIT. So we're going to talk about 2 approaches, a more traditional or aggressive approach, and then a defensive approach. If you view the current market as uncertain or bearish or volatile, you may want to have the additional protection to the downside by structuring your trades a little bit differently. And I'm going to show you a real life example based on stats taken pre-market today. So it's really up-to-date stats using iShares Bitcoin Trust, which is listed on the NASDAQ under the ticker IBIT. Okay, Steve, so for your viewers who are not familiar with covered call writing, we're on the sell side of options. Let me break down the 3 terms in covered call writing. Covered means that we buy the shares before we sell the option. Now, for every 1 options contract we sell, we must first own 100 shares of that underlying security in order to be covered. So 1 contract equals 100 shares. Call is the type of option we're selling. We are undertaking the contractual obligation to sell our shares at a price that we determine, that's called the strike price, by a date that we determine, that's called the expiration date. So we, the option sellers, set the parameters of the contract. And for undertaking that contractual obligation, Steve, we are paid handsomely in the form of an option premium, which is generated into our brokerage cash account immediately. That is our starting point. Now, the third word in the term, writing, covered call writing, that simply means we are starting a sell to open order. So once we own the shares, we go to our broker platform. What do you want to do? Options. Okay, click on options. What do you want to do? I want to sell a covered call to initiate a trade. And those are the 3 words in the term covered call writing. So we're going to actually make this come alive with some real life examples. Now I'm showing you a screenshot that I created this morning before the market opened on IBIT. Now I'm wondering if you could see my cursor now, and I'm highlighting certain parts of the screenshot. Could you see that, Steve? That little circle there? I don't know if you can hear me. Okay, I'll keep going. IBIT at the time this morning was traded at 61.71. And this is for the July 18th, 2025 expiration. So we're looking at 10-day trades. Now, a couple things on this option chain, which is simply a price list of all the options for IBIT. This is specifically for that July 18th expiration. Now, IBIT trading at 61.71, there are 2 options we're going to look at. We're going to look at the 63 strike, which is higher than current market value. That means we are agreeing to sell our shares for $63 a share. It's trading at 61.71 at any time through 4 p.m. Eastern time on July 18th. That is our contractual obligation. Now, the other strike we're going to look at is the $57 strike, and that's in the money, lower than the current market value of 61.71. All right. Now, I want you to take a look at the blue oval at the top here, bid-ask spread. Bid is the price you get when you sell an option. Ask is the price you get when you buy an option. The difference is called the spread, the bid-ask spread. Now, you'll see the 63 out of the money strike, higher than current market value, had a bid price of 85 cents. Keep that number in mind. The in the money 57 strike had a bid price of $5.10. Now, do we get that entire 510 as profit? No. Why? Because are we not losing $4.71 a share if we sell at 57 when it's currently trading at 61.71? Well, the spreadsheet that I'm going to show you shortly will deduct that and give you your actual real time value profit. Okay, now a couple of things about these Bitcoin ETFs that I love and so appropriate for covered call writing and cash secured puts is there are two things actually. One is the liquidity of the option. So you take a look here at the open interest, the liquidity, how many open contracts there are. And you could see the 63 strike had 17,696 open contracts. Huge. Even the 57 in the money call, 1,756. So you'll notice here that the spreads are minuscule, 85 to 86, only a penny here. And for the 57, only 10 cents. So very favorable for our trades when you have a very tight bid-ask spread, and that's because of the option liquidity. The other thing I wanted to show you was the implied volatility. How volatile is this ETF? Well, you can see the implied volatility for the 63 strike is 32%. That's robust. It's not ridiculously high, but it'll give us a nice premium return, as will the 57 in the money strike, which had an implied volatility of 41%. Just to give you a perspective, the 32 is a little more than double that of the S&P 500 today, and the 41 is almost triple that of the S&P 500 today. Okay, keep these numbers in mind, folks, 85 cents and 510. Now, I want to show you a spreadsheet that I developed along with Barry Bergman, BCI Managing Director. It's a one-of-a-kind spreadsheet. If you're using these strategies, it's a must-have, for sure. It took us a year and a half to develop, and there are over 2,400 formulas inherent in the spreadsheet. You see on the top section here, it's for covered calls. The bottom section, cash secured puts. So let's focus in on the covered call section at the top. In section 1 in these blue cells, we enter our trades. In section 2 in these white cells, you get your initial calculations per trade. And then in section 3 in these green cells, you get your initial calculations per portfolio. Now, this middle section is what makes this different from every other calculator in existence. These are the contract adjustments, and there are over 20 different exit strategies inherent in this spreadsheet, and that's why there's nothing else like it. In section 4, if indicated, you make your contract adjustments, exit strategies. Section 5, you get your post-adjusted results per trade, and in section 6, in these green cells, you get your post-adjusted final results per portfolio. In section 7, you can make notations regarding your trade. You know, like there was a Fed announcement today that caused the market to go up significantly, or I rolled down and then I rolled out. Whatever you want to enter will be inherent and archived in this spreadsheet. Now, I want to tell you this. What you're going to see in the next slide, and I think it's the next slide, is you're going to see the trade entries from the blue cells, and then underneath that, I just piggyback these two, you're going to see the initial calculations. You're not going to see 4 through 7. Okay, so now remember the option chain I just showed you. This is the spreadsheet now. In the blue cells, we enter the information. Stock is trading at 61.71. We have the 63 out of the money strike, the 57 in the money strike, 85-cent bid price, $5.10 bid price. I just entered 100 shares to make things easy. You can enter as many shares or as many contracts as you're selling. Now, let's look at the results. First, on the bottom section here, let's look at the top row here. In the brown cells, if we sold the out of the money 63 strike on IBIT for a premium of 85 cents a share, that would represent a 10-day return of 1.38%, annualizing out to 50.28%, giving you an idea of how significant these returns can be. Now, in addition to that, because we sold an out-of-the-money strike, we can also get another 2.09% return if IBIT moves from 61.71 up to or beyond the 63 strike. So there's an opportunity there to make almost a 3.5% return in only 10 days. So you can see the advantage of the out-of-the-money strike is that additional second income stream of share appreciation. Now, let's look at the uncertain market, volatile or bear market, where we might opt for the in-the-money 57 strike with a premium of 510. Well, you'll notice that our trade management calculator spreadsheet will break up that premium into two components: a time value, which is our actual initial profit of 39 cents, and an intrinsic value component, not profit, but additional protection to the downside of 4.71%. Now let's go to the purple cells, which gives you your returns, which is 0.68%, annualizing out to almost 25%. It's still significant, and you have lower return than the out of the money, but look at this huge protection of that time value profit, 7.63%. That means you're guaranteed a 25% annualized return as long as share value doesn't decline by more than 7.63%. Now you have over an 8% protection down to break even. The last thing I want to show you on this screenshot, folks, is the break-even price point. For the out-of-the-money strike, where you see this blue arrow, it's $60.86. Now, the in-the-money strike goes all the way down to $56.61. So I think you could see the advantage of the in-the-money strike, which has this intrinsic value component that the out-of-the-money strike does not have. So take the traditional or aggressive trade in normal to bull market environments, take the defensive or in-the-money strike in volatile, bear, or uncertain markets, and you could structure your trades according to your assessment of the market, number one, your personal risk tolerance, and then you can structure your trades accordingly. One size does not fit all, but just take a look at the returns that we're talking about. Annualized return of 50%, annualized return of almost 25%, huge protection to the downside. So securities like IBIT or other crypto-related securities, again, just to reinforce what I like about them, is that they have huge liquidity, which makes the favorable trading environment for us because the bid-ask spreads are so tight. And also it has robust implied volatility, which means that we can generate significant returns and still generate that protection to the downside that conservative investors like me and many of you are. So that just gives you an idea. A real life trade with up-to-date information right before market open today, Steve, is when I took this data.
Yeah, and I think a lot of people sometimes don't really understand that options are not just to the open and the 50 minutes after the close of the markets. It's also a longer term play here. That it's and the normal way of doing options is that we use it as a hedge, but in this way you're actually building a thesis around IBIT, and you're producing a longer term play so you can produce actual cash, which I think is a much better play than just willy-nillying it through the markets. Dr. Ellman, I have to ask, people want to get a hold of you. How do they get a hold of you?
Well, you could see my email address on the screenshot, Alan, A-L-A-N, at thebluecollarinvestor.com. I answer all of my emails. You can go to my website, thebluecollarinvestor.com. I write a blog article every week. You can go scroll all the way down to the commentary section, put in questions. I'll answer it, someone from my team or other members. So we're in constant dialogue with our members, and so you can catch me there, and then pretty soon on the Quasar platform as well.
Yeah. I love that as the education comes onto our platform, as we now have it, and you're bringing it onto us. I think one of the cool things about it is that you giving of your time. A lot of times we see these talking heads just talk, and they don't actually give you any good quality information. And I really appreciate the blue collar investor. One of the things that you'll see with Alan is that, and I've known him now a very long time, is that he is actually patient. I am not a patient person, Alan. I'm very good about telling people that, but you are. And
I didn't know that about you.
and I do like to talk, as everybody knows. But what's interesting is I think you do take the time, and sometimes options can be, as one of my rules, options isn't scary, but to a lot of people sometimes options is scary, and you make it not scary, and you make it in a way that people actually do learn a new trade and a new skill. So I appreciate that. All right, Alan, if there's anything else you want to add to it, I'll let you go, and I look forward to seeing you next time.
Yeah, hopefully, your viewers can send feedback, and if there's anything in particular they'd like me to discuss related to these strategies, I can create PowerPoints in in a short amount of time, and I'll be happy to provide the information your members are looking for.
Yeah, in the meantime, want everybody out there, click on that button, like the bluecollarinvestor.com. Just go to the website, check it out. Alan gave you his personal email at the company. Go email him, talk to him, say, hello, Alan, how are you? But I'm having issues, or I'd like to learn more about Blue Collar Investor or how to do covered calls. I appreciate that, even from Big Beat and Quasar Markets, as now Alan is part of us. So, hey, thanks, everybody. We'll see you next time here at Quasar Markets Live.
Thanks, Steve.